Hey everyone. Like Ryan said, I'm Casey Rose. I am a broker in the Bozeman office. I'm going to go over some multifamily data today. Have some really interesting numbers for you guys. And just so you know, when we are saying multifamily, we are referring to apartment buildings, 5 units or more. There are no duplexes, triplexes, fourplexes, single-family homes involved in this data. So the big rectangles you see going up around town, that's what we're talking about. So a lot of mixed messages nationally about what's going on with the multifamily market. The big debate is it on a positive trajectory, or will demand decrease substantially with all the supply that's coming on the market? So just a couple headlines here to show you. So the consensus nationally seems to be that the demand is weakening, the supply is coming on aggressively, and there's a lot of it across the country that's dampening rent growth, leading to increased vacancies and depressing cash flow for developers. Bozeman, the big question is, can the demand keep up with the supply? And we're going to go over some pretty aggressive supply numbers in a minute. And we do think that there's enough demand to absorb it, but that could come at a cost with lease rates. We think that all that supply could drive lease rates down substantially. So just want to talk about some demand drivers for the asset classes. So at the top is basic employment. So basic employment, it refers to export jobs, so money coming from outside of our economy and being circulated within our economy. The best example of that would be Detroit in the auto industry. Basic employment creates more jobs, so that leads to total employment, which drives office and industrial demand. Then population and household size drives residential demand, and then retail demand is driven by disposable income. And when we are talking about household size, that is any roof that has people related or unrelated under it. So that could be a house with roommates or a family. So last year, Matt came up here and he did some math that we're going to go over in a couple minutes, but he determined that we need roughly 327 units delivered annually to keep up with demand in Gallatin County. So we had a pretty robust pipeline a year ago. There's about 2,000 units in planning and permitting. So you guys can start to get an understanding there that 327 units really isn't that much compared to these robust pipelines. So he said, we will not be surprised if vacancy rates go up and rent growth goes down. And a year ago, we didn't know by how much, but let's see how we did. So 1 year ago, right now, we're at 1.32% vacancy for multifamily. I was going to take a poll right now, but the answers are in your brochure that you have. So it jumped up quite a bit. It's at 6.92%. That's up 5.6 year over year. Healthy market is right around 5%, like Ryan talked about. We do not anticipate that number going down anytime soon, and you'll see the pipeline in a minute. But this is driven by increased supply and the premiums that developers are asking for lease rates. So on the topic of lease rates, keep in mind that this is an average of everything from a studio apartment to a 3-bed, 2-bath in the apartment range. The number is different a little bit within, 1-bed, 1-bath, 2-bed, 1-bath. So this is down 3.3% year over year. This is definitely due to a higher supply of housing. There's more options for renters, but that is if you were pro-forming 6-7% rent growth year over year. I'm sorry, I'm not delivering better news to you. So from a transaction standpoint, we are down 41% on transactions, and that 7 transactions in the last year. So don't put too much stock in that number. It was 12 a year ago, dropped down to 7. That's pretty normal for a high interest rate environment. And then the average price per unit is down almost 11%, and then price per square foot of the unit's down 17%. So with higher rates and sellers not having too many options to exchange into if they do sell, most of them are sitting on their investments and holding them. All right, pipeline. So Construction currently coming out of the ground under construction, there's 1,133 units. So just keep in mind when we're looking at these numbers that Matt determined a year ago that roughly all things equal 327 units need to be delivered annually to keep up with demand. So this does not include the 450 units that have already been delivered in 2023. Now, permitting, we have 568 units, and in planning, there is 3,100 units. Out of those 3,100 units, 371 are affordable, and 167 are student housing. Now, it's pretty unlikely that all of these units will get delivered. They'll likely be delayed, and some of them potentially might not happen. So we're going to briefly go over those numbers that Matt went over a year ago to come to that 327. Now, I pre-populated these, so I did not have to do any public math for you guys. So we're starting off with our population size, 100,000. That's cross-referenced against a couple sources. But the big variable that we're going to be looking at from here on out is that population growth rate of 2.52%. When you multiply those two together, we get our annual population growth of 3,150. When we divide it by our average household size of 2.43, we get our number of homes needed, 1,296. That average household size has been constant over a few years. And then we do get this data, the household size and growth rate from Esri, which we deem a reliable source. So population that rents, 39%, so that takes us to 505 total rental units needed annually to be delivered in the county to keep up with demand. Now, out of that 505, roughly 66% of people rent apartments. So just in mind that that number is not gospel. That number, there's a lot of variables and moving parts that go into that number. So it's an educated estimate, more so than an exact number that needs to be delivered annually. So going back to the Mueller cycle here, that number 11 is the point where supply meets demand. So when you move into hyper supply, that means supply is starting to outweigh demand. What distinguishes hyper supply is increasing vacancy rates, decreasing new construction, which we anticipate happening, and then lease rates decreasing as well. So going over some takeaways and concerns, going back to that population growth rate, that's the big thing we're looking at here. Will people keep coming to Bozeman? It has a lot to offer: quality of life, growing economy, healthcare and education, and then people are starting to come here because of climate issues like insurance rates in Florida and California and other natural disasters. The only thing we really fear here is the Yellowstone eruption, but we're all here, so we're placing our bets. Downside, cost of living, especially high for service workers. If you're making minimum wage, it's hard to afford $2,200 a month for rent, obviously. And then, as Ryan touched on, is remote work winding down. So looking back at that slide from a couple minutes ago, remember we had 1,100 units under construction, and that population growth rate was 2.52%. Now, if those 1,100 units are delivered over the next 18 months, then we would need a population growth rate above 10% to absorb all of those units. So when you have that many units hit the market at once, developers are going to have to get really competitive and incentivize tenants to come to move in, and whether that's a couple months rent abatement, lower rent prices, there's going to have to be some creativity involved to absorb your units. And then with that said too, we do anticipate the vacancy rate going north of 10%. A year ago when it was 1 to 2%, that is just as much of an outlier as 10 to 12%. So if you were writing your numbers down, pro-forming a multifamily deal for 3 years down the road at 1 to 2% vacancy, your numbers might get hit pretty hard. So how will deliveries play out? We do anticipate timelines being extended, projects being canceled, developers doing more strategic delivery, so phasing out their deliveries. The city is entitling a tremendous amount of land for high density development, and that is their attempt to make housing more affordable in Bozeman, which could be a good thing. But what we're trying to encourage is developers to make educated decisions with their multifamily development. You don't want to be the guy that's seeing what way the wind blows and then making decisions on that because it feels right. We encourage data-driven decisions. You should know what's in the pipeline. You should know where it's going to happen, and other factors along those lines. So I think that is all I got today. Interesting. It'll be very interesting to see how multifamily plays out over the next 2 to 3 years. There's a lot in the pipeline. So can our population growth and our demand keep up with that excess supply?